Hi, this is Peter Schiff. It is Monday, April 13th, 2009. Well, a lot of people today are taking some comfort in the earnings coming out of the financial sector. Late last week, I think Friday, we had earnings from Wells Fargo that were better than expected. Today, Goldman Sachs is coming out with earnings. And, you know, this is leading people to come to the conclusion that, hey, maybe the worst is behind us, the banking crisis is over, now that these financials are earning money. Nothing could be further from the truth. The solution to our economic problems is not financial sector earning more money. I mean, the financial sector is too big. I mean, profits in the financial sector are going to have to shrink. They're going to have to shrink substantially. And remember, during the bubble, sure, the financials had all kinds of earnings. That was part of the problem, what they were doing to derive those earnings. And I'm sure the earnings that Goldman Sachs or Wells Fargo are coming up with now, a lot of it has to do with trading profits, certainly for Goldman, that are probably not going to get repeated in the future. But I think there's a lot of accounting tricks. There's a lot of assumptions that are being made that are probably not going to be accurate. And I think a lot of the earnings really are sowing the seeds for future losses, much the way they did a year or two ago. So I would not jump to any conclusions with respect to these numbers. You know, it's also interesting that Goldman Sachs announced also they're doing a $5 billion capital raise. They need this money to pay back the U.S. government the TARP money. Now, the interesting thing, of course, is Goldman Sachs claims they don't need the TARP money. Well, if they didn't need the TARP money, why can't they just give it back? Why do they have to sell stock? Why do they have to raise $5 billion? Obviously, they must have needed some of the TARP money because they can't afford to pay it back without going to the public and raising more cash. But you'd certainly have to be a complete moron to buy any of this Goldman Sachs stock. You know, the main reason that Goldman Sachs wants to pay back the TARP money is so they can pay the executives and the employees bigger bonuses and higher salaries. That doesn't sound like a great reason for an investor to buy the shares, just so the money can be flushed away in bonuses. Remember, all these Wall Street firms are doing is transferring wealth from the owners of the company to themselves. The dividends that people who buy these common shares, the dividends are going to be practically non-existent, if not completely non-existent. All the profits are going to be sucked up by the employees of these companies. So there's much better places for your money. There's absolutely no reason to buy. Now, of course, you know, the shares are about the same price as they were when Warren Buffett bought Goldman Sachs. But don't be confused, because when Warren Buffett bought, he got a coupon. He bought preferred stock, I think, with a 10% coupon. Now they're asking people to buy common stock with no coupon. So stay away from it. And of course, remember, Goldman Sachs shares have doubled off their lows. And the fact that the Goldman Sachs wants to sell is probably a good indication that you shouldn't buy. If you happen to own any Goldman Sachs shares, you should sell them into this offering. Also, interesting today, look at what happened with the dollar. Look at the dollar index. It was down more than a full point. It's really beginning to break down on a chart. It's looking very top-heavy to me. Look at the Australian dollar. Surged today by about 2%. It's broken out to a multi-year high. And I think it's putting in a significant bottoming pattern. Look at some of the other metals. Look what happened with copper prices today. I think it's at a 3 or 4 or 6 month high. I'm not sure. So things are turning around, and I think ultimately as the dollar really starts to slide, that's when we're going to start to see much, much bigger problems, particularly for inflation. And you know, tomorrow we're going to get the PPI. And everybody is talking about the fact that, oh, you know, inflation is not a concern at all right now, that maybe it'll be a concern in the future, but it's not a concern right now. That's all nonsense. We're creating the inflation right now. Money supply is out of control. The fact that there's a lag between the creation of money and the effect on prices doesn't mean you don't have to worry about it until the prices start to rise, right? That's like saying I'm smoking cigarettes. I don't have to worry about cigarette smoking because I haven't gotten lung cancer yet. Obviously, by the time you get lung cancer, it's too late. I mean, you can't take back all the cigarettes you smoke. So by the time we really start to see rapid increases in the CPI and the PPI, it's too late. The time to do something about it is now, although I think we've actually passed that time. But the government is trying to convince us that we don't have to worry about it. Meanwhile, look at the price data that's coming out. Look at the numbers we got today on used car prices that are surging. Part of the reason for that, look at the data we got out of China. I think last month, China auto sales surpassed U.S. auto sales for the third consecutive month. And auto sales in China exceeded 1 million units for the first time in 1 month. Whereas in the U.S., I think our automobile sales are down about 35% year over year. Meanwhile, the Chinese are buying more and more cars. That's going to put more upward pressure on the raw materials necessary to make those cars. And I think that's going to continue to put upward pressure on used cars here in the United States, because obviously more of our used cars can be exported into the strengthening Chinese market. So we'll see what the media says tomorrow when the PPI comes out. Most likely it won't cause them much concern. But again, you can't wait until prices rise to be worried about inflation. You have to be worried about inflation when the money supply is growing. Now, also, I think the last time I was on this blog, I mentioned that I was going to be appearing on ABC News on Sunday, both Good Morning America and the ABC Nightly News. Both of those segments were canceled. Hopefully, they will be on next weekend. I think on either Saturday or Sunday. I'm not sure. I'll try to keep you posted. But apparently, there was some breaking economic news that was of vital importance to the country, that ABC really had to run with this breaking story. In fact, on Good Morning America, this breaking news story, I think, consumed 50% of the show. I think 30 minutes of the 60-minute program was specifically focused on this vital, breaking, important national news. And what that news was, the news that was so important that they had to preempt my interview, was, of course, that Barack Obama announced that the new first dog would be I can't even remember the name of it, a Portuguese water dog. And I guess they announced this Portuguese water dog a day or two early, and it was a breaking story. And of course, they had to cover how the dog got named, where they got the dog. They had to show all the all different Portuguese water hounds, and they had to discuss the fact that why didn't the Obamas go to the pound and save a pet, but now they were going to make a contribution to the pound to show how much they care about homeless dogs. So that was the news that was so pressing and so important that who knows what other real news ended up on the cutting room floor. But hopefully I will be on ABC Evening News and the Good Morning America next week. Anyway, also one more note. I finally was able to get around to upgrading the equipment that I'm using. I bought a new computer to do these video blogs. Hopefully there is a meaningful and noticeable improvement. And I apologize to the people and thank people for bearing with me until I actually had some free time and was able to do something about the equipment. I am still working on trying to improve the quality of this video blog, and I think you'll be noticing more improvements in the coming months. Anyway, thanks for listening.